Candleweb. All right, so I think it's always an honor to share, and in a sense, I see speaking or teaching in any sense as it means to serve, and I don't take this for granted. All right, so again, I'm excited, and I look forward to doing great things from this our great place. It's not a small place. All right, so thank you.
Yeah, the pleasure is all ours. You're welcome to the class, sir.
Yes, thank you, sir. All right, can I start or?
Oh, yes, you can. You can kick off. The floor is all yours.
Oh, great. Thank you very much. Well, I don't know how long I have got, but we have a great topic ahead of us, and I'll try to keep things as brief as possible. Yeah, because
Okay.
okay, you're saying something.
Yeah, so you have 40 minutes for the main class, then we allocated 20 minutes for questions.
Okay, I think that's perfect. Right. So I've been asked to, discuss with us and on understanding market principles and risk management. I think to start with, we need to carefully lay down the objectives of this our discussion, all right, so that we can, eventually connect the dots at the very end of this lesson. All right. The main goal of this discussion is to equip every one of us. I want to assume we all are, learners. Either we are new learners or intermediate learners or advanced learners. One way or the other, we are all learners. And it gives us an opportunity to have a common ground to explore this subject of discussion. So the main goal is to equip learners with a solid understanding of how financial market works, and of course how to identify market risks and how to manage this risk effectively in either it is crypto trading, forex trading, stocks trading, commodities trading. And the learning objectives are simply, one, understanding market fundamentals, which in essence explains how the financial market operates, and of course helping you to identify main market participants and to slightly bring some differences between spot, futures, and margin trading. And the second objective of this discussion is to recognize market dynamics. And dynamics because market keeps evolving, because we have a diverse participant over the years, and which will make us to see the imports and the reasons of cycles. By cycles, I'm speaking of minute, day, minute, hours, days, weeks, month, quarters, years. And the third, important objective of this discussion is to develop basic analytical skills. And the ones we're going to be discussing, trust me, are just going to be purely fundamental, sentimental, and probably technical, right? Um, and then finally, it's to help everyone listening and learning to understand what risk and reward is in relation to building a trading mindset, and how to apply safety ethics in trading and draw out a realistic plan for continuous growth. So I think we just have to have this at the back of our hands, so that the outcome of this our short minutes discussion would say, yes, I understand how market principle influences price movement, and we should be able to access and manage trade, risks effectively. So I want to once again appreciate this opportunity and congratulate everyone who are in this class, because this will be my first time, you know, talking around the subject upon my resumption in a remote school in financial engineering as a postgraduate studies. And so much have come in for me personally, which perhaps in the course of this our discussion we might find very handy and of course important. So I think we need to start by asking very clear questions, because the topic we are asked to address is understanding market principle and risk management. I want to assume we all know what the market we're making reference to is, and for which we would love to understand the principles governing and, you know, responsible for it. All right. So, what are financial markets? What exactly are financial markets? And I think this is the beginning point of our discussion, so we can, travel up from that. The financial market is a basket of financial instruments where we have majorly two participants in categorization. We have in the buyers and the sellers. Just think for example, just think for example, please can you share your screen? Oh, okay. I would only share my screen with probably TradingView. I'm saying all I'm saying. For me, I had a very sudden emergency today, and it was very tough. I just drove back in some minutes to 6, to which I need to prepare for this. So my slides are literally with me, and I could just try to compile something for us and share after this class. I think that's all I can do. Just kind of bear with me, even though I had been aware of this, I'd been preparing kind of mentally, but there's been so much at hand because we're having an event. We're preparing for on-site event for a crypto exchange, BitGet. So apologies for that.
Oh, we
All right,
totally
thank you.
understand that.
Okay, great. Thank you. So I was defining the financial market. Financial markets are platforms, either they are physical or digital, where people, companies, governments, individuals, they connect to buy and sell financial instruments or financial assets, be it currencies, be it stocks, be it bonds, be it cryptocurrencies. In essence, financial markets is just a place of meeting where financial transactions are executed. So, for a moment, let's just forget the profit or loss has been made. It's just to bring us to a common ground of knowing what the financial market is all about. And every time we see our local markets in the areas we're living, we just need to tell ourselves that the whole forex market, stocks market, crypto market is just an advanced and digital version of this physical market we are seeing. And there are important things about those markets that we need to know. One of the key ideas is that the financial market allow people with money, either they're investors or lenders, to connect with people, organizations that need money. And so it's important. So there are people with money, and there are definitely people who are in need of money. And these two, right, need to meet at the marketplace. It's called a marketplace, so they can prosecute transactions, come around with trades. All right, and of course, don't forget there are diverse kind of trades. For example, in crypto, we're having beyond buying and selling, we're having lending and borrowing, right? Some call it a version of DeFi called LendFi, or yeah, so or yield finance. So we're having different types of transactions being done in the marketplace. I mean, the typical thrift collector who goes from shop to shop, store to store collecting money. What that person is doing is also important in the marketplace. So we're having diversities of operations, permit me to use it that way, in the financial market. And I think this is very, very important. So we know then, the principles that guides the financial market. Because when we're talking about understanding the market principle, we're not just speaking of a local market, we're speaking of the financial market. And of course, both the local market and the financial market rests on the crest of demand and supply. And I think I need to also add this to our understanding that, either they are currencies or digital assets, all these are traded on the financial market actively by market participants. We're having diverse kind of market participants. I just mentioned the thrift collector in local market. So you have the supplier who comes from Newi, permits me now, or someone who comes from Aba, and probably coming to a place like Lagos. So you have different people. Then you have the ones who don't in fact leave their offices in Victoria Island and who are in charge of millions and billions of Nigerian naira, take for instance, or maybe Standard Charter, who don't have the normal, um, you know, how do I say this now? The normal C to C, right? Customers to customers, clients coming to them. Like we have, like we have people of such category going to banks like UBA, going to banks like GT, because I hope Standard Charter is more of an high-end, advanced banking system that really goes about providing banking services for people who are would I say investors, suppliers having hefty amount of funding. So that's what Standard Charter is all about. So I'm just saying that we're having different kind of market participants, even in the local market. So you're having, and of course, yeah, you having retailers, you having those who are the suppliers, you having those who are the wholesalers, permit me, you having those who are the consumers or customers, then you having the shop owners. All of those are all participant in the marketplace of the local market. Now, bringing this into the digital version, all right, we are having different kind of participants. Of course, would retail traders would be. I mean, myself, yourself, every one of us will probably are managing our own asset under management, managing our own funding of a thing. And those who are institutions who are called whales, they're called whales for reasons that are of course clear, because they move massive liquidity. Think of the water, think of the tides, and liquidity is best known as money. And so they can move a lot of it. They can really move a lot of it. And they can swallow a lot of it. In essence, they can, in fact, in a sense, cause a tsunami. And those are the ones referred to as whales. Examples include people like BlackRock, who are of recent just signaled their positive intent, or positive thumbs up, or positive, what do I say this now, applaud for crypto. Excuse me. So just imagine, and they're having about, I think, is it about $10 trillion asset under management? Is it 10 trillion? I think so. Enormous amount of money, enormous amount of money. So, so you can be so sure these ones coming into crypto from traditional, financial market, they are not just whales, and we can almost say they are. I don't know what to call them, because whales are just the biggest animal in the sea. Just for me to quantify how FT their participation is in the financial market. So the financial market, in the sense of the digital financial market that we are discussing about, as different participants, from retail traders to institutions to banks to companies to governments. All of these ones are participants in the market, because they have one or two roles they play. So who are market participants? The financial market participants, in essence, are simply um, people of different categories playing different kind of roles. That's cycles around buying or selling of one or two financial instruments or financial assets in the marketplace. Those are market participants. And it's important for us to know something, that we need to identify and differentiate, types of markets. Of course, we have in the Forex market, we have in the crypto market, we have in the stocks market. Of course, they're very much different. The Forex market, or the foreign exchange market, is the one that you get to trade a country's currency against another country's currency. An example includes, or maybe let's just put it this way, because it's now having so much more financial assets like gold. Let's just say the foreign exchange market, or the forex market, is simply the financial marketplace where exchanges are done on currencies. Let's just stop at that. And so currencies include fiat, which we have, USD, United States dollar, which we have Canadian dollar, which we have euro, which we have, what other currency do we have right there again? We have Australian dollar, Hong Kong dollar. I mean, I'm just mentioning. Okay, yeah, we also have naira. Oh, yes, but it's not really traded on the NG, on the foreign exchange market. So we have in naira, NGN, and it's important for you to note that you know all these um, all these um, all these all these currencies are available for trade on account of the liquidity that are provided for them in the open financial marketplace. So yes, and of course we have gold. It's a currency, but it's not a fiat. So fiat are currencies that are printed by countries, right? They are legal tenders that are used for transactions as legalized by different countries, and the body of people, or but the body of governmental agents or governmental agencies that are responsible for the printing and of course legislating and governing of the fiat is they are simply known as central banks. So we have in Central Bank of Nigeria, we have in central banks in all countries, and it is interesting that every central banks, they are also under certain world forum on world policies that governs them. All right. I'm saying this because all the central banks are connected to a node, a point, and which you would see them having, and that's the truth, especially in this world that we are in, connected to, either it's WEF, World Economic Forum, all right, so traceable to some very historic story, which I don't want to go into, that date as far as the 19th century. The current, monetary system we have is created. So all I'm just saying is we have in both bankers, I mean, both banks, both hedge fund managers, both governments, both individuals, both companies as participants of the financial market. And of course, no one comes to the financial market to lose money, but of course, those also happens. And it's just important to understand what the financial market is all about. So, in essence, what we do in the marketplace in the financial market is basically to buy and to sell. Either we buy currencies, we buy cryptocurrencies, we buy stocks, we buy bonds, we get certificate of deposits to lock up our funds in government, or in a bank savings. I mean, those are ways people earn money. You could lock up your fund in, let's say, we don't get certificate of deposit in Nigeria. In the US, you save your money for, let's say, 12 months, and then you'll be given what is called a COD, certificate of deposit, and that's to let the bank know that for the 12 months you're not going to be withdrawing your money because you've kept it locked up, and then they're going to be promising you a certain amount of, return, or what they would call interest. And of course, it's interesting we talk about interest, but that's not the subject of our discussion. We're having so much to really attempt. And so, whenever you drop the money, right, the bank promises, let's say, 3%, 5% is too benevolent, but really they promise around 3%, right? And then they have your money with them. And then at the end of 3%, let's say you deposit $10,000, you can always do the math. 3% is, of course, going to give you probably around $300, right? At the end of the month, at the end of the year, 12 months. So in essence, let me reverse that mindset I've just passed out. What happened is that you know, the bank borrowed your $10,000 and um, and then paid you and then paid you interest of 3%. They borrowed it. But you know what they would do with it? $10,000 you've just saved, which in reality the bank borrowed, they would go lend it out to someone at an interest rate of, let's say, 10%. You want to build a house or you need some urgent 10K. We have 10K. We are always generous. And the bank hands out your $10,000 at a very conservative rate of 10% to the person who is in need of it. And that person is going to be paying 10% back to the bank, right? And of course, the bank settles you with 3%, and the bank, net 4%, to cover for operations and every other things in between. I'm saying all this to just let us know that it's important for us to understand that in the marketplace, the power dynamic of money and the strength of this, is is funnily differentiated, right? Into the hands of different participants. So you have, those who are the biggest, and those who are the strongest in the marketplace. You would be talking of central banks, and of course, ahead of central banks, there are some I have forums. I'm talking of the World Economic Forums, of which you will definitely have to link them with the Rothschild and very great investment banks in Europe, in Israel, in America. Those ones really control many things and they really sell many narratives. But I'm just trying to make us see some very important things that, even if some persons, like, let's say, darks, like we always see, are posting, hey, I made $100,000, $200,000. Great, but it doesn't mean anything in the grand scheme of things. And I'm saying this not to belittle what he's doing. Get me? I'm just saying it to make us see how there are hierarchies of power dynamics even in the place of the marketplace. And the truth is, you are really fighting like a shrimp in the pool of, or in the liquid. Let me use the word a pool. In the pool of several stronger participants that are like, let's say, dolphins, let's say, tiger sharks and whales. You're like a shrimp. Imagine a retail trader like a shrimp, and you really want to snack on some bit of profit. The place of managing risk is is a non-negotiable when it comes to you staying alive. So I hope really picture that well. I don't know if we all are getting what I'm trying to say. And I'm saying all this so we can see some clear mental picture of how we have, yeah, that's the truth, of how we having different, dynamics, right, into this thing called the marketplace, and why there are certain principles governing it, certain principles guiding it, right? Yes. So I think at this point now, we at the very least have understood that we're having different market participants with differentiating, liquidity strength, which I was referring to as power, and also economic understanding, which I would best define as either analysis or market making, because every participant have different understanding of the market. For example, those who created the marketplace, right? The reason for they coming is not so that they can buy and sell. No, they already own the market. Their economic understanding of the marketplace is whatever it is we can deploy to cause transactions so this up. That's what we must do, because that's where they get their own profit. And so I'm saying all this to just make us understand some important thing, that the economic understanding everyone has about the market, it's all dependent on their role in the marketplace. So for the whales, their role in the marketplace could be one of which is manipulations. Of course, they'd always make profits, and one of which is sometimes to rebalance pricings, right? Because if they feel this particular asset is overpriced, they have the capacity and the power to drive the price downward. Take, for instance, gold is smashing all-time highs. For the past 8 weeks, it's been up back to back. You can go pull up XAU USD charts on TradingView, one of the important tools that have been used for analyzing the market. I think it's important I mentioned that. So gold has been up for 8 weeks back to back. You can go check that out. And it's also very interesting that Q4 last year we had cocoa. Cocoa has been, cocoa, boomed. And I know some people that are living close to where I do visit, and many of them were farmers in cocoa, and many of them made a very mess, a terrible mess of their harvest. Yeah, because yeah, I wouldn't go into all of the stories. I'm just saying that cocoa is really going to experience its own season of crash, as gold is already apparently doing as at the moment. And I'm saying all of this just say something that why we can look at certain financial instrument and say, oh, this is likely what it's going to be doing. It's simply because of the amount of information that you have in your disposal, right? And that's just the truth. So the reasons why these learnings are, of course, very, very important, and to me, non-negotiables, is so we can also be a better market participant at the level we are participating in. Because trust me, as someone who led a team of junior traders at an hedge fund, Terralix, and we're trading, an asset. We're trading about $1 million of asset under management in commodities market. I've come to realize something interestingly, that thinking differs. Right. When you're trading with your $500 in your account and you are so happy, you're milking $100, you're jumping up and down. Trust me, if you enter the cycle of people who are control trading millions of dollars, and who are having enormous supply of money, their thinking perspective in this marketplace very much differs. And so that is important in the course of this our discussion. So we've been able to explain what the financial market is, and of course, we've been able to highlight to us, the market participants that there are. And I think what is important for me to talk about right now is what really moves the market, because in understanding the market principle, it goes beyond introducing us to the markets, right? Knowing what the financial market is all about and the participants. It also comes down to what really makes price to move. What really makes price to move? If just take for instance the example I made, mention of some moment ago, gold. What's been responsible for the price of gold going up from 2022 Q Q2, Q1. I remember trading gold 2022 at around about $2,000, right? But now it's already on at about I think 4,124 as at this time of this our discussion. It peaked at about 4,400 essentially, or more, about 4,400, yeah, in essence. So what really drove the price of gold upward? What was responsible for that? The basic answer will definitely be demand and supply. What demand and supply? Are there differences in understanding of what demand and supply is at different levels? Of course, yes. To a retail trader, and I would define what a retail trader is. A retail trader is one who uses technical or sentiment analysis, or perhaps sometimes fundamental analysis to, judge the market's direction based on certain repetitive patterns through perhaps candlesticks or behavioral moves, right, that could be read through different objective items of estimating likely outcomes. So whoever uses behavioral patterns that are obtainable from candlesticks, or different analytical metrics, to purely say this is where the market is going and that's where the market is going, those are retail traders. And some and I'm not saying this to say if people are also using it alongside with what they already have, they're retail traders. No, but those who purely rely on candlesticks or informations that are that are obtainable based on behavioral patterns that are repetitive, those would leave or leverage or and stay on those are retail traders. I must be honest with you, I'm a retail trader. When I was in Terralix, or I've already mentioned the company, when I was with this company, we use way more than what's it called? Candlesticks for analyzing the market. We extrapolate data from Bloomberg Terminal, Marex, some funny software with expensive pricings. We get more datas, real-time datas, all right, that are sometimes called back-end datas, just to know really what is going on. Because we don't, let me put it that way, because I'm just with you, like I am. We don't know what actively is going on in the market if you don't have this back end data, in a sense. And those ones, you don't call them retail traders, because they're having more information at hand beyond what we normally purely use. Perhaps you're using Forex Factory, you're using TradingView, you're using you are using Metal Meter, right? Metal Meter, one of the important tools. And you have all of those simply, or maybe coin market caps, informations, deck screener, all of those, to just look at some data and all of that. Trust me. Now, let me even paint a very relatable situation and scenario for especially those who are importantly, um, apologies, right? You all know how, what's it called? This meme trading goes, right? So some of you, like me, some years ago, you would put your $50 in this particular asset and you'd expect it to be like the ones they always post. That when I'm saying they, I will explain who they are in relation to our discussion, and then you suddenly realize that your $50 worth of coin, which you got on this particular coin at its market price and at its market cap. Now, market capitalization is just the multiplication of the total supply of a particular asset, maybe it's shares or crypto, by the market price. So you get a market cap by multiplying the price of a particular asset by the total supply or the available supply of that particular asset. Now, and but you got this asset or this coin, $50 at a market cap of, let's say, $500,000, half a million. And so you were very optimistic that this is the next Pep, the next big meme coin, the next peanuts, all right, the next weave. And for reasons best known to the market makers or to whoever they be, this your $50 turn out to eventually worth $0.5 after some 80 hours. You just begin to ask yourself, wait, I analyze the market. I knew this, bro. Let me tell you something. What you knew is what you got or what you have. There are many launched that coin, and they know those who got the coin. True talk. So, and they know themselves, they've told themselves, you buy 10K, I buy 50K, all of that. They've really gotten really very, very much early. And then you now sort of identify a pattern on this particular coin, and then you feel, you look like some sadhu or some, I don't know what to call them, some prophets. You suddenly know how and where the market will go. I must say this at this point because we're discussing market principle. The market of financial market is a game of probability, and all you're going to be doing is that you'll be building and developing models that will help you, synchronize, right, and find your synergy with the market over time, which you will definitely have to be testing and repeating, because different models might be needed for different market dynamics, as participants could always change in the market situation. So the scenario I was painting of this person who got in on this crypto asset and eventually got to lose over 99% of his fund is because though the person might have, a bit of understanding with candlestick analysis and some bit of I don't know, whatever the person might know, that person is still very much limited in understanding. To those who definitely exits, right, with a sniper exit with massive profit. You'd see some people who got in on that same asset with $1, which is like 50 times lower than yours, and still leave that market with $10,000. And you ask yourself, why? How? It's because of what they understand. And that's what I'm saying. Our understanding of the market very much differs. It's dependent on who we are in the market. And it's important for us to strive to be beyond who we are, especially if we want to really take more profit. And that's why you need more information. So why I'm saying all this is why I'm saying all this is so we can see the differences and the diverse phase we must, put to heart when it comes to looking at demand, all right, and supply, demand and supply. So when you are looking at the candlestick printing and it's breaking certain structure, which we often use in market analysis, you feel, oh, it's already taking more demand. But the backend data is saying that there are no much buy orders. Because one of the things we also do get while I was, this a senior trader in this particular hedge fund is we look at the market orders. How many units of lead have been gotten? I mean, have been purchased, right? On a 3-month contract, how many units of zinc has been purchased? And so when we see that the units that have been purchased are lesser, while the candlesticks are jumping, because those are the realities that also happen in the market, you tend, because from our own end, we tend to say, hey, this is not a good point to place a buy, or better wait to see what the old shenanigan the market wants to do. And trust me, after those events, the market do shenanigans. And so there must be things you definitely need to know, right? That will come to explain your understanding of demand and supply. Demand is simply the point where the market, get more buy orders, simple, and supply is the point where the market gets more sell orders. Of course, there are different types of market trends, which I must talk about. And I really wish, okay, let me share my screen so we can see something on TradingView quickly. Um, okay. All right. I don't know. Yeah. Can we see the screen? Can we see this?
Yes,
Okay,
we can.
great.
Yes,
All right.
very
Now,
well.
the truth is, in reality, where I've just marked out right there is what is called um, a supply zone. Because a typical supply zone is a point where this is a 4-hour chart. I'm not here to talk about market analysis, anyways. A supply zone or a resistance, right? And then they call the other one a demand or a support, right? Great. The supply zone, right, is the zone where the market, this is using technical analysis and retail mindset. A supply zone is simply the zone where the market, refuses to continue going upward, where it has more tendencies to sell than it has tendency to buy, right? That's the supply zone. And I just have to state that so we can actually be on the same page of, understanding of this. So in essence, that's a supply zone. There is no more willingness for the market to push upwards. And one of the things that are very much character that are very much clear signal and characteristics of a supply zone is that there are candle wicks using candles base, and there are, what else again, exhaustions. There are bearish engulfing candles. All of those are candlestick related. But when you want to look at a supply zone from a what a will I say a wholesaler now from a from an hedge fund perspective or from a company's perspective, where will you think the company would think that we are now at a supply zone? Number one, when there are too much news that are going out on the stocks of the company. I mean, I'm going to be talking about the Nigerian stock in this moment. When you see people talking so much about the stock of a company, that's already at the supply zone. There are just too much talk, and it's already becoming too much known. All right. When everyone begins to talk, oh, the price of Presco is this, the price of Seplat is this, MTN shares are good for this amount, this and this and this. What else again? This particular stocks of this particular oil palm is doing this, is doing that. That's the market reaching a supply zone. The supply zone is the point where you are not only having less demand or sudden funny demand, and I'm using those words carefully. We're having less demand sometimes, or sometimes we're having sudden funny demands. When I'm saying sudden funny demands, it's clear from the financial perspective that these assets are already overvalued, and there are certain storage of new money entering the market, or you know new buy orders entering the market, which are not as hefty as the ones that got in at the start of a particular trend or a particular run. That to a company or to a an institution is a supply zone. So it's a supply zone. And the truth is, you can not beat crypto exchanges like Binance. You're buying your coins, you are doing this, they have all the data of the active buys and active sales. They knew the behavior, that was very much apparent in the fourth quarter of 2022 and in the first quarter of 2023. They knew the behavior of investors, and they have all the data of active buying orders, and they knew the behaviors that are actually apparently being displayed fourth quarter 2020, five and first quarter 2025. They can actually compare these both and know what is going on. So the truth is, all your behaviors are right in their presence. Just think of someone who is trying to play smart in a grocery store that has CCTV camera everywhere. Just think of that kind of person, and just imagine the owner sitting at the control room and having very a very close relationship with the inspector general of the police, with a direct line, and he could just deploy forces at just one single call. So just picture that person in relation to those who are the market makers. Binance is a market maker in a sense. They make markets, right? That's the truth. And the truth is they know when the supply zone is eaten. They know it. Look at Coin Gecko or Coin Market Cap. They give some symbols which they make reference to as the fear and greed index. The fear and greed index, it makes you also, in a sense, understand the supply zone, and that's the truth. But I keep telling people that whenever you want to understand the market, look at it from a higher time frame perspective. You're going to see more noise, and then you will see more truth in the market. So, what are we saying right now in the bigger market? For how many weeks you can actually count? 1, 2, 3. This is a weekly candle. Weekly chart, and one candle represent the week 1, 2, 3. Then you're having 6, then you're having 9 straight weeks of bullish move, right? And if you go look at gold, which is XAU USD, all right, you would also see something. Okay, this is gold. Sorry, this is gold, right? It's been 9 weeks of a run. 1, 2, 3, 1, 2, 3, then 1, 2, 3. So I want you to look at BTC. All right, let me just use crypto. All right, so now the Bitcoin market is very much different from the gold market, as you can see. Of course, you're having supply zones at some point, as you can see here. Supply zone. This was a supply zone here. There's 2 points, and the market sold sort of a supply zone, but then the market is refusing, after breaking above the supply zone, it's refusing to drop. But then once it breaks the supply zone this time around, everyone knows, oh yeah, it's gonna be probably selling. I'm not giving a financial advice here, anyways. I'm just making us to see the different views of the market and supply zones. And now higher time frame makes you to see a clearer picture of the market. Now, if you understand market analysis, you surely will know that there are something such as the market trends. There are the uptrend and downtrend. This is typically an uptrend from this particular point. Let me use my horizontal ray. So from this particular point, Bitcoin has been in an uptrend, right? And I'll prefer to use a green for a buy, right? And then it's been uptrend all along till it went above this particular zone, which was the previous all-time high that it got to some 4 years ago. So it went above this point, right? And clearly we can say, oh, fine, it has made a new all-time high. Is this a likely point for a drop? What are the tendencies for the things that happened this particular year to happen? What really happened 2021, 2020, 2021? How can we use this to understand what's going to be happening here? In essence, the trending markets or the trends the markets are in makes you to know what you would likely do and how supply and demand come together to give an objective conclusion in the market. I must say something here as an important discussion beyond understanding, price movement, which sits around demands and supply, news, sentiment, and macroeconomic factors, and the role of liquidity and volume and volatility. Beyond all of those, you need to understand that, see, looking at the market from a longer term perspectives gives you a very clear reasoning of what the market is likely going to be doing, right? So you can stay on the market principle. I must say something as part of the things I really wanted to say, which is that a dollar today is worth more than a dollar tomorrow, right? A dollar today is worth more than a dollar tomorrow. And I think that might not be overstated, right? It might not be overstated, but I think I must just say that anyways, right? Anyways, that a dollar today. So that implies that no matter the amount you have today, it's really worth so much, and you don't want to throw them off and blow them and waste them, especially if you are thinking of building wealth for a long term, right? And it's important to state this at this point because risk management is not boring and it's your means of survival. I've literally described every one of us who are retail traders as shrimps in this market. And of course, you know that all these big fishes in the seas, they feed on shrimps and all forms of crabs. And you just have to come up with your own edge that could help you beat the uncertainty that the market always poses at you. Um, it's important. It's important because if you move from volatility to victory, you must master, the market principle. And the market principle simply, like I'd said, sits on demand and supply. That's just the truth. It sits on demand and supply. It sits on market volatility, which you can always measure to a large extent, only on occasions where there are extremes, like the manipulation that happened on the 10th day of the month of October, right? And for me, I think those, right, are very much importantly necessary if we would actually think, right, of gaining mastery and making the most of the principles we have understood of the market in risk management, because it is a market you've understood that you can draw a risk measure around. I mean, if you don't understand the market, what risk are you drawing? What risk measurement or mitigation plan are you putting in place? What you don't know can always, I mean, it's an old Yoruba proverb. One in more, I would interpret. What you don't know is older than you. You need to come to the point of, and that's why the best we can just do is to create an interest and a spark to go understand the market. What is the market trend? Trust me, 1 hour chat, 2 hour chat, 3 hour chat, 30 minutes chat. I do trade them. I'm not saying something wrong about them. I'm just saying that sometimes, or in fact, most times, they're very confusing and could in fact lead you into more seasons of confusions if you don't see the bigger picture of the market and let those ones stick more, right? So market trends, support and resistance, which are key part of demand and supplies, candlesticks basics. I can't go into all of that right now. Identifying those support and resistance level, which I just literally did. This is a typical support level. I mean, typical resistance level, which is turning to a support, right? Support could turn to resistance, all of that. And of course, it sort of, repeats itself in the market that way. You might not see this one very clearly, but if I turn it back to the candlestick, you would see there are, that candle wick there, right? Literally. So you can see this support level. This resistance level turn into a support in the sense. So, yeah. So I'm just saying those really contribute to understanding the principles of the market. So the market principles really sits around what trend is it in, the place of support and resistance, and of course way much more important factors that are responsible for the movement of price, such as volatility, news sentiments and macroeconomic, factors. Example of news that are very much important for the market: NFP, the non-farm payroll. It's simply a report card released by the Bureau of Labor Statistics in the US to let us know, the economic strength of the United States. We literally know the US economy by looking at the NFP report, right? Because it let us know, how many people are employed in the US. And this report excludes farmers and some certain government sectors, right? And yeah, that's just the NFP report. So when it comes out, the Fed can now know what they're going to be doing. And of course, there are other factors responsible for the Fed knowing what they want to do. So, but with the NFP report being a major, reason behind what the Fed does, the Fed stands for the Federal Reserve. The Fed now knows either they would cut interest rate or raise interest rate, all of which defines inflation or recession in the United States, economy. All right. And it's just important for me to state at this point that, both demand and supply are basic, um, basic, knowledge that defines the movement of price. News, sentiment, macroeconomic factors. I mean, it's wars. They all contribute to the reason, the pricing of assets. I'll tell you something. There was a day I was trading U.S. oil before I began to pay more attention to macroeconomic factors. And technically speaking, U.S. oil, I can't remember the price right now. I used to remember, but because it was tough around this time, I had lost thousands of dollars to trading, crypto. And then the new year I was going to enter. I wasn't saying, trading US oil to be a bad one for me. So, and this was the time Russia and Ukraine were going to start their war. And trust me, technically speaking, not just me, I had people we also analyzed together. This market was going to be selling. So, what happened? I kept on shorting this market because I knew it was going to sell. But what was happening in real time? Oh yes, there was war going on. So there was a clear, apparent demand on metals and oil, because oil is the lifeline and is the bloodline of war. So oil fundamentally kept buying. Why technically I kept on trying to sell. Eventually it sold, but not the time I wanted to sell. So macroeconomic factors are so clearly important. So clearly important. I'm going to tell us for free. Banks, they really, really, really want wars because they make a lot of money from that. I'm going to tell you. So it's important for you to know this, right? Macroeconomic factors. You don't want to be a trader always not paying attention to news, paying attention to what is going on around you, and to so. F- I, I don't need anyone to tell me. I don't need anyone to tell me. Whenever there are wars, I know the asset I want to go buy. If I have millions of dollars, I know you can just pick some oil, pick some, aluminum, pick some, asset, just buy them, leave them, and after a while, you are so sure you're going to be in profit. That's just the truth. So I think that's very much important. So now, beyond you understanding the place of price movement, which is a critical part of the principles of the market, now once you've been properly introduced to the market, which we've just done, introducing you to the foundational knowledge of the market, crypto forex market. Crypto market is very much different because the cryptocurrencies are also currencies themselves, but they live on the blockchain, which itself is a digital ledger or a distributed ledger technology. I can't explain that also here, but then that, it helps us to know how crypto differs, right? Every of the transactions that goes on, in the crypto world are, transparent. They are on an immutable ledger. You can literally spot every transaction on maybe Etherscan or Bitcoin scan or BNB scan or Solana scan. You can always find those transactions there, right? Which makes crypto, in a sense, decentralized. And I use the word in a sense for reasons that some of us might know. And so then you have the stock market, which is all part of this financial market. So I'm saying, beyond being introduced to the financial market and you have an understanding of how price moves, which is of course demand, supply, news, volatility, liquidity, you need to also know the basics of market structure. I might not go into that, like I said. Like you can see from this point, right? Let me pick this from this point to this particular point, right? You have an uptrend, right? Clearly, this is an uptrend. An uptrend is simply a trendy market that, of course, create higher highs and higher lows, and that keeps leading the market towards the upward side. Let me pick a price range and of course estimate the percentage movement. So for how many years? For some, this is from 2022 December till September 2025. Bitcoin has been up 667%, right? Interesting. So for the 3 years, that amount of percent, that's very huge. That's not something that you can typically get in the traditional market. I mean, it's almost very rare. But that's crypto for you, very wild. So market structure very important. Yeah. So even though it's a very clear uptrend, like I mentioned, you can see this, right? It's a clear uptrend, right? That's what this market is. It's a clear uptrend, right? A very clear uptrend, but then you can be so sure it didn't go there all the way up. There were moments of ups and down, ups and down. And this is just a picture of an uptrend. And of course, the downtrend is like similar. This is a picture of a downtrend, ups and down, ups and down, ups and down. And there are many market perspectives of analyzing all this market structure. Some use Elliott wave, some use Wyckoff, some use demand and supply purely, some use trend lines, some use ICT liquidity, some use smart money concepts. It's just a little bit different. All right, and then yeah, so from the retail perspective. So all of those are mayors of understanding market structure. Some also use candlesticks, right? There are different types of candlesticks. One of which is the AMA, the Doji, the what else again? The what else they got? Yeah, the Doji star, morning Doji star, evening Doji star. What else again? Engulfing candles, different types of candles, right? Really, gravestone, different types of candlesticks. All those candlesticks, some also use them to trade. I'm saying you just really must own up to one thing. Now, I must tell you something. One of the things I found myself doing, right, and really that affected my progress with trading is that I kept on trying to learn everything, and it really made things bad, right? So bad that even those moments when I had losses over $10,000, $20,000 personal funds, which of course started from zero. I must tell you something that it made me lose sight of being confident of owning up in trading the market again, right? Uh, and what really is the thing I needed the most is holding up to one thing, refining that one thing, making my edge clear. I must tell you, one of the things that made it very much easier for me of recent, and I'm saying of recent, 2 years ago into now, and I've been in this market since 2020. One thing that makes it very, very easier for me of recent is reducing my target profits, especially when it comes to trading, reducing it terribly, maybe to 2:1, 3:1 market. And one of the things that made it easier for um, you know, you know, those are important part of. Can we see me, please? All right, Can we see me, please? I just want to get that. Can we all see hear me?
Yes, yes, we
Okay.
are with you.
Yeah,
We can
thank you.
hear you.
I'm already at the top of the hour. I'm about to talk about risk management. So those are important part of what really made things better for me. Why? Because I reduced the amount of reward I want to get. I must tell you, one of the things that you must take away beyond you knowing, the introduction of the financial market, understanding price movement, which you've explained briefly, and market structure and technical and fundamental analysis. Because technical analysis is anything you do, like I'm doing, to understand objectively where the market is headed, to understand analytically what you're going to be doing, and to also understand, um, you know, decisively in a disciplined perspective what you will do if the market goes against you. That's what technical analysis is in general. So technical analysis starts from you ideating, analyzing the market, documenting all that you have seen, and also effectively executing based on what you've seen. Of course, following your drawn out mitigation plan, which manages your risk. So, what really matters is not so much of knowing as it is about doing and planning. And when I'm saying doing and planning is taking the trade actually, right, with realistic reward and defined risk. Taking trade with realistic rewards and defined risks. It's important. I mean, it's very, very, very illogical to take your school fees to go trade. Very illogical. Illogical. It's very illogical to take all your monthly earnings to go trade. It's very insensible. Very, no, see, forget how much people can hype things. When people go to the village, they wouldn't tell you. But when they bump into cities, they always make that a headline on social media, especially X. And our generation lives in a very, very unfortunate one. And I'm saying the truth that we don't even learn to appreciate the little we got. So I just have to state this again at this point that see, um, the market is unforgiving to pigs, and that's what my friend will always say: pigs, those who are very dumb, but it is always given to bulls and bears. Bulls, those who know when to take the buy; bears, those who know when to take the sell. But pigs, they don't just know what to do, and it's not because they don't know, or because they are just always funny and dirty. So they just get slaughtered. So it's important to note that your risk management is your life-saving machine. It's the truth. You must clearly define it. Don't just leave things to chances. Don't. And so, what is risk management, and how is this helpful? Take, for instance, let me quickly open a chat on B2C. I mean, those who follow me on X, I made a post. Let me show you the post if I can. Can I pull this up now? Okay. Let me see if I don't know. I don't know if I can. I want to just make reference to that post, yeah, so that I can just make more emphasis on what risk management looks like and all of that. Okay, just a moment. I'm almost there. Yeah. So let me make reference to this particular post. Of course, I'm not the island of knowledge and I'm not always right in the market. Trust me, you must always have that mindset if you would really win this market. So let me share this particular screen. Now, I don't know if you are seeing this. So I gave a sell. Now, let me backdate the story. This was October 19th, and I saw someone making a post of opening a sell position on Bitcoin at 109K. And I just wrote that, what if I quietly tell you I will sell this same pair at 113,350? Of course, I did that. And this was the place I placed the sell 113,350. Why I add that gray area there is to tell me the stop loss. You can always see the date where this trade was created. I mean, the date, everything is going to be there, 20th of October, right? And that's yesterday, and that the drop is going to happen. And of course, Bitcoin definitely dropped. If you go check, it dropped to 109K. I mean, I can bring you back down to this trade so you can see. But why am I, telling this story? I'm telling this story because you put stop losses in trade, not because you don't trust your trade that to go the direction. Now, two funny things happened. A particular account I was trading got profit. The other account where I put extremely close stop loss got knocked out. It got knocked out of this same trade, which I'm going to be bringing us back again to the trading view to show us something very, very important about that trade, which you'll see on a one of our charts, right? So this is it. So this was a short, right, from here. It's short all the way from here to this point. And of course, I believe from the analysis I gave, which I don't want to go into all the story, we're still going higher, like 116,800, which I wrote there. But why is that happening? That sometimes you just get it right and don't get it right, even though you knew where the market is going to. It's because you don't have a clearly defined risk, or perhaps your risk are not realistic. So why are we talking about market principles, which includes, understanding the market structure, understanding technical analysis, understanding price movement? All of those are principles of the market. Market is defined by price and patterns. Market is defined by that, really. Price and pattern and time defines the principle of the market. Everything is about timing. Everything is about the patterns that the market is creating. Maybe you have seen it or not. And it's also very much reflective in the price of the market. And so, why these are constants and sometimes evolving, especially because of participants. So, you have price, participant, and then you have patterns. And they are defined by time. Time is the only one that's literally constant, but you see price, you see pattern, and then you see participant, they're not constant. They are variables that change in the market, right? And so the only thing that you can really use to understand these other three is time. By 8 o'clock London session, what does the market do on zinc, on gold? Time helps you to understand what the participants, what they, you know, what the patterns are, right? And what likely would be the price? So price is probability, and then patterns and participants are behavioral. Permit me, patterns and participant, they are behavioral in a sense. And so price is a probability that depends on the both, and the constant time, helps you. And that's why you just don't trade anytime. A trader or one who wants to enter the financial market, you're not just an anyhow person when it comes to how you go about your life and your time. Everything is under arrangement. And so understanding all these important constituents when it comes to the principles of the market. So the principle of the market sit upon participants, price, patterns, right? Very, very important. And of course, time being the constant is a part of the principle of the market. A principle, a principle. When I'm talking of principle, things that stands, they stand. There would always be time. There would always be price. There would always be patterns. There would always be participant in the market. And so this could be reflective in either demand and supply, either volatility, either market trends, either whatever you have there, macroeconomic, factors, new sentiment, but then you have these four important things to pay attention to, with time being your best ally. And with time, you can then know what risk you can devise. I'm not going to be giving us the risk measure you want to devise or whatever it is, but then you know that risk management is whatever measures, whatever method, whatever mitigation you put in place to ensure that you reduce, or have effective control on your potential loss. And I'm using the word potential because it's not yet realized if it has not been taken. Your potential loss in a given trade while maximizing profit. The meaning of risk management is how you can effectively play around with your liquidity, your fund, to amass more profit with less loss. And so that implies that sometimes if you take 20 trades, you might in fact have just 8 winning trades. And with 8 winning trades, please listen carefully, and 12 losses, but with effective stop losses, your $100 can still eventually be worth $150 after a month. That is 50% on 1 month. No bank promises that in a year. And I was listening to a podcast last year, I mean, Q4 or Q2, sorry, Q2 last year. And this trader is from South Africa, not the normal young fellow, an older man. He says he's been trading for like, I think 2000. And it was literally on the market when 2008 crash happened, financial crash that led to the launch of Bitcoin. And it was saying something like, we sometimes celebrate because some people are posting cars. That's not the real trade. The real reality of profiting in trading is when your mindset becomes developed and you become so um you know advanced and growing in the perspective of how you relate to the market. You're no longer emotional, no more emotional. You take things on principle. So again, understanding market principle will really be effective in giving birth to a principled trader. A principled trader. Even though, do you know this particular move? I was aware about it. You all can see. I was outdoor today. I mean, I drove to a different place. I could not trade. All my accounts, they were not trade set. Why? Because I'm not on my desk. And of course, the move happened. What did I do? Nothing. What I want to go do, and I'm done with this class. I'm going to probably read a book or probably see some documentaries. There's nothing I'm going to be doing again. I've already missed the move. Why wouldn't I be rushing? Because I've gotten my fingers burnt enough to know that it wouldn't change anything. And one of the things I tell myself is my candle will still form in the market because we are retail traders. I'm not having Marex personally since I mean I left the company. I'm not having all of those softwares I mentioned. If I have them, oh, good for me. But then the things I could control, my risk, my time, then I better make the most of them to be able to make the most of the market patterns and of course, the market price, since I only get to know more of the participants in the market based on the information and the data sets I get. So, this risk management will define your, leverage, your stop loss, everything, 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 and how much you can afford to expose to the market. And I think at this point, I will just have to, bring everything to a closure, which is that you must build mindset from consistent discipline, right? And avoid as much as possible mistakes. And I know I can't say this well enough for some people not to still make mistakes because those are part of the things you learn. My wife will always say something, and anytime we have stop losses, even though we have been having way better profiting trade, she would say just treat your stop losses as the cost fees you pay to learn more about this participant in the market. And that's the best I would just like to leave us with. And so you would learn more about your trading personality with you the more you trade. And the best I can just tell you is please just be yourself. Don't compare yourself with anybody. Don't look at anybody. Don't look at Twitter. I mean, there are a lot of liars there. I'm telling you, a lot of deceivers there. Be you, grow you, be a better you, and be extremely disciplined. And I'm telling you, just watch yourself in a few moments of time, making a bit of profit and a bit of progress and a bit of possibility with you and the market. The market is just about you and yourself, not you and so many people at the very end. You'd see that it's about how the market reflects who you are to you and how you can become better by interacting with it. And so that will be all from my end. Thank you very much. Oh, I think someone is raising his hand. Greg. Yes. So Mr. Wilson, that's it from me. Thank you.
Thank you so much, Mr. David. Wow, this was an amazing session. And to be honest, you really went in depth and took the class a step further. I believe all our students here are fully blown right now with all the knowledge you've dropped. But not to worry, everyone would explain further, would teach you a lot more about these topics and also get down to the basics. So thank you so much, Mr. David. We really, really, really appreciate you. Thanks for sharing your knowledge with us. And thank you for the amazing session. So we'll be moving to the question and answer section now. We have Greg Odi already raising up his hand. So as usual, please, if you have questions, raise up your hand or drop them in the chat section, and we would address them while we still have our lecturer here. So we'll be starting with Greg. Greg, I'm unmuting you right now. So please go ahead and unmute your mic and ask your question. Thank you.
Yeah, good evening, Mr. David. First and foremost, I just want to say a big thank you for the lovely session. I really want you to really help me clear my doubt because when it comes to crypto, I'm really very skeptical. Like from what you were saying now, based on the Forex market, you know that there are some things you check before you place your trade. You trade on the higher time frame. You're looking at your market structure, your candlesticks, and whatever chart patterns. But like for the crypto, like for instance now, if the news is coming on non-farm payroll, if it's Forex, most times, most people, it's advisable one stays off the market. But what actually drives the crypto market? Because I'm not seeing what drives the market? What gives you confidence to put the trade apart from chart patterns? That is, if you're trading with Bitcoin and all that. What makes you? Because it's to me, it's dicey when it comes to trading crypto. Hello, can you hear me, sir? So what are the drivers?
My mic. Okay, thank you.
Okay.
Yeah, so I get you, Mr. Greg. I was literally laughing. Yeah, go ahead.
The thing confuses me because basically, if I look at the chart, basically, if it's Forex, maybe I'm trading Euro USD. I basically know that if I want to trade, if I'm going to trade technically, naked trading based on your chart, I know if price bounces off for support turn resistance. I'm looking at my candlestick pattern, looking at my timing, what time is the market, and then with my chart pattern and all that, maybe adding a moving average, I basically can say maybe a bounce of that I can say yes, it entered. That's a simple pattern. My moving aligning, but with crypto, you can do all that, but you can just enter the market and something just happen. I see it as something driven by sentiment. So I don't know, how do you safeguard yourself? Because I don't look at crypto at all. So how do you safeguard yourself from all that irregularity in the crypto market?
This same irregularity is responsible for a lot of profit for some people, I must tell you. And while we're preparing to wrap things up, right, I would love to say clearly that one of the key drivers for the crypto market, for me, is the the ecosystem, the deployment, the development. For example, there was a development that happened on Ethereum. That was Q. Is that, I think? Wait, 2022, Q4 2022. The merge. It's called the merge. So they were going to be bringing Ethereum to a state where it used. It's been a whole lot of work from the Ethereum Foundation for years, and I think they've still been building that till now, and that's what led to layer twos like Stacknet, like zkSync, like different layers. So that particular now this particular time, this was around September.
Can hear you, son.
Hello?
Hello, I'm still
Can you
here.
hear me?
Can you? Okay, we can hear you now. You went off before.
Apologies. So I was telling my people that once we see a major dump, a major manipulation, in the middle of all this development that is happening, after these seasons of dump, then we should be expecting a buy. Now, 2021, the
Okay.
bear market in crypto began November. Specifically, I remember trading that particular day alone. I knew how much I lost November 2021. And then the truth is that pain should only drive you to learn more about something. And the truth is,
Sorry.
Mr. David, we lost audio from you. I don't know if you're still speaking.
yes, I'm speaking. Can you hear me?
Oh
Yeah, you
yes, we
said
can
you
hear
like
you now.
you say pain can make you learn more
Yes,
or something.
pain only makes you learn more. And that was what happened to me. So I came to realize something about the crypto market. I don't know if you can see hear me. Can you see hear me?
I can hear you. I can hear you.
Okay, great. So that the crypto market is cyclical. That is, the seasons of the market is cyclical. It happens in seasons. There are the bull runs, all of that, and then the bear runs, all of that. And one of the things that are responsible for the cycles are Bitcoin halving. So the halving in Bitcoin is important, and that happens every 4 years. And in the middle of the 4 years, just slightly before and slightly in the middle and slightly after, you have the reasonings and the rationale behind how the candlesticks will align, right, with the halving to tell you how long the market will run. And so I made a post in 2022, December into January 2023, that we're going to be having a bull bear market. And I knew, I'm telling us categorically, even right now, that we have gotten to the top of the Bitcoin market, at least for the moment. That's my take based on what I know. And the Bitcoin halving and certain developments, right, which of course we are seeing. One of the things that made this bull run to last longer is because we're having more institutional investors, Grayscale, BlackRock, different institutional investors coming in the middle of a whole lot of new narratives like AI, like RWA, real world asset, all of those came in. So when we begin to see things, and the crypto market, like you said, is way more sentimental, but then it is backed by certain things. So the Bitcoin, the just concluded bear market was a reason why the market has just exhausted and is expected to experience a relief. One, two, it's cyclical. The Bitcoin halving is only going to be a reason why we're going to be having more bullish market. And then thirdly, we're having beautiful narratives that excite people. People are very much emotional with crypto. Crypto is emotion. I must tell you, emotional. Oh, this is pumping. Oh, this is that. This is trending. This. So those things begin to build up. The meme cycle also came in a lot of excitement. So it's like an euphoria, like an opium, and all of those came in 2023, 2024. The bear market should have started in 2024, but it didn't because of all these excitements. And 2026 is likely going to be a terrible year of financial crash, and the whole US trade war with China is only a preparation for that season. So I'm saying those are the reasonings that come into place for me to understand what likely the market is going to be doing this particular time and this particular season, while then the candlestick is only going to be for me to know what and what to do and where to enter and where to exit. I don't know if you understand that. So there are about 4 or 5 reasons that are foundational, right, when it comes to the crypto market for me. And then the candlestick come in between all of that. So, and when it comes to trading futures, for me, I prefer trading Bitcoin because that's the one that I see more sensible, that has more, funding in it, more, about over $2 trillion of crypto assets in Bitcoin. So, to an extent, we have more financial data, and how repeated the patterns are on Bitcoin are way
So
more. are we more certain, unlike others, right? That we've not understood their behavioral pattern. So, and because majority of the crypto assets that are just newly launched, the oldest following Bitcoin, I think Ethereum, and then BNB
Ethereum.
2017. Yeah, so we don't have so much. So it's just a little bit of participants activities have been recorded on the candlesticks. So that's why Bitcoin is way more better. 2008 or 9 till now, and then all the new ones is just about you looking at what was the trend, what's the sentiment on Twitter. People just launched an airdrop. Oh, it's overvalued. Then we look at the market capitalizations computations, and they will say, okay, this coin is overvalued. Then they will still actually do a token unlock. When they unlock the token again, there will be more token in the market. And by the sentiment I'm reading, I think this market is overvalued. Well, it's a good time to sell. Well, and then I'll use my technical to plot out and see what will give me the confirmation for that sentiment look. And if it confirms it, I could place a short sell and then get out on time, especially for leverage trading. But then when it comes to investing or buying in spots positions or buying the coins down, it's something to be held for like 1-2 years. I remember buying a coin 2023 with about $200-300, and it went on to what about 10K on Gates, like only one like. Very funny, but there was a narrative around that. So just to buttress the point, it's more emotional, but yes, there are cyclical reasonings, there are ecosystem deployment or solutions reasonings, there are all of those other factors responsible for bringing a bit of clarity to what we're going to be doing on the longer term and the shorter time in the crypto market. So yeah, that's it. And of course, NFP also affect it on those days. You can go check NFP data with an FOMC. Yes, FOMC and NFP. Both data also affect the crypto market, especially Bitcoin on those days. So yeah. So
FOMC.
yes.
FOMC, sir.
Yes, FOMC, yes, sir.
Okay. That means for me to trade crypto now, I must be sound sentimentally.
Yes, very sound, very sound. And you must be up to date with the information of things going on in the space. You can't be out of space. No. You just have to be in the space.
That's what I'm realizing, sir.
Mm.
Thank you very much.
Thanks, boss. Thanks. Pleasure is mine.
I'm grateful.
Yes, sir.
But I don't know if maybe you can give
much.
us something like a driver, maybe like that we can help to develop ourselves towards that line. Maybe like some articles or where we can go to get those sentimental this thing. Maybe like a little bit of a script that we can basically where we can go to get sentimental knowledge and all that. Maybe
So,
through Mr. Wilson.
through what?
Through Mr. Wilson, maybe.
Yes, I would get that across. I would get that across and send to you.
Thank you very much, sir.
Thank you, sir.
Thank you so much, Mr. David. We appreciate you. And thanks for the interesting question, Greg. Does anyone have any other questions? In the absence of that, we'll be rounding up tonight's class. And quick one, the attendance for today is live on our platform as usual. Make sure you've signed your attendance for today's class. And the recording of today's class will be uploaded on YouTube as usual during the weekend. So make sure you sign your attendance. If you have any other questions, please let us know. And in absence of any questions, we'll be rounding up tonight's class. So I'll just give 1 or 2 more minutes. No one is raising up their hand. All right, thank you so much, Mr. David, for tonight's class. We really appreciate you, both all of us at Candleweb and the entire students. We appreciate you for sharing your knowledge. There's a lot to learn, there's a lot to digest, and to be honest, I believe if we apply what we have learned from today's class, many of us would end up being successful in the crypto market. We really appreciate you, Mr. David. Thanks for today, and thanks for your time commitment.
Thank you very much, Mr. Wilson. The pleasure is all mine. I'm super excited to always be a part of Candleweb. Thanks, boss. Thanks.
Yeah, thanks. You've been with us right from the start. I remember our first event, I think it was 2023. We had the Twitter space with you. And
Yeah.
it was really amazing. Thank you so much.
Thanks, my boss. Thanks.
Yeah, God bless you. All right,
Amen.
class.
Blessings.
Yeah. So, okay, I can see a message. Okay, it's not a question. All right, then we'll be rounding up the class for tonight. Thank you, everyone, for tuning in. Do have an amazing night, and we're going to see you in the community. Take care of yourselves, and good night.
Good night, boss.
Good night.
Yeah. Yeah, good night, Chibuzo. Good night, Eric. Good night, Faith.
Good night,
Good night,
good night,
Favor.
everyone.
Yeah, good night, everyone.